Hi, and welcome to this week's look at the major stories affecting the market so far. And what are we going to look at this week? Well, we're going to start with the NASDAQ and see what's been happening with corporate reporting season. We're going to take a look at the Fed news and how that affected their decision, and most importantly, the statements made after it this week. Take a look at gold and crude oil and see how they've been faring during a bit of a tumultuous week. And we're going to finish off, obviously it is earnings season, we're going to take a look at what's been happening with one of the big reporters that's coming out this week. So, to start with, the NASDAQ minis falls by more than 1.5% after tech giant reports. E-mini futures were down over 1.5% in early trading on Wednesday. And in fact, the composite closed down 2.2% on Wednesday evening. So why was that? Well, we had earnings from some quite major players come out. We had Alphabet, which is the parent company of Google, Microsoft, and AMD, Advanced Micro Devices. So we start with Alphabet because, it's at the start of the alphabet. Now, revenue came in there at $86.3 billion US dollars, and that was against a forecasted of 85.2, so above expectations. However, there was a big note about a slowdown in advertising revenue, and that is regarded by investors as a main driver for the share price of Alphabet, and is also keenly watched. That did cause shares in Google to fall about 2.7% after the report. So although they beat expectations, the share price fell. It was also true of Microsoft, who posted revenue of $62 billion US dollars. That's up about 10%, and against a forecast of $61.2 billion. And again, despite that good performance, and particularly good performance of the cloud segment Azure, shares were down 3.2%. A lot of the blame for that being attributed to the fact that the outlook given by Microsoft was, shall we say, a little bit light and not as positive as hoped. And also maybe the extreme optimism on AI is beginning to wane. And finally, we had AMD. They also exceeded expectations. Income was $6.16 billion US dollars against an expectation of $6.12 billion US dollars. But that was also followed by a cautious forecast. And the share price fell, just slightly more than 4.5%. Worth noting, AMD, for example, was up 137% on the year. So if you look at a slightly bigger picture, perhaps not quite so concerning. But again, it seems AI optimism may well be decreasing. Worth also noting that via MarketWatch, JP Morgan analysts seem to believe that today's stock market has signs of a tech bubble, which is quite a concerning statement to make. Take a quick look at the chart on the NASDAQ. The price is forming a bear pattern of head and shoulders. The price is also located near the support block, which forms the mean line of the ascending channel, which we're showing in blue. That supports around the 17,333 level. Now, bears could break this and direct the market towards the 17,000 psychological level and the lower border of the channel if this bearish sentiment intensifies. But we have got on Thursday results out from Amazon, Apple and Meta, all their reports coming out, and they could provide some key guidance on what's going to happen. Will we see, beating expectations as we saw with the others, but a decrease, or can it provide a little bit of positivity to the market? Certainly worth keeping your eyes on those reports as and when they come out Thursday evening. Okay, secondly, we're going to take a look at what the Fed have said this week and what impact that's had on the US dollar. Well, unsurprisingly, completely expected, no change in the interest rate this week. But there was some sort of harsh rhetoric from Jerome Powell post the announcement of the no change. And he basically said that interest rate falls or cuts in March are unlikely, and that the Fed needs to see more data to be confident in a rate change, and it needs to be clearer that the market is moving towards the 2% target and that the decrease is sustainable. Now, obviously, this cooled market expectation for a rate cut in March. He pretty much said that himself. That in turn led to stock market decreasing along with certain results, but it also led to a strengthening of a US dollar against other currencies. In fact, the euro against the US dollar rate dropped below 1.079 for the first time since mid-December 2023. If we take a little look at the FXOpen chart for the euro dollar, we can see the price is falling towards the lower boundary of the ascending channel, which is shown in blue. And it's fair to say the market is sensitive to psychological levels as such. Now, 1.100, 1.1, which we've mentioned previously, in fact, back in November and December of last year, acted as important resistance twice in January, stopping the price rising over that point. We've also got 1.075. Now, reversals have formed previously. They may provide some support to the bulls, and they may sort of pin their hopes to it as the lower boundary of the ascending channel passes near this level as well. So for the bulls, that could be a very, very keen level. After that, we're looking at 1.05. Now, that seems unattainable realistically, but if the Fed keeps rates high for, and to quote, as long as necessary, the longer that period of necessity goes on, that could lead to a breakdown of the ascending channel, opening the way to the support level, which is down at 1.05. So again, sometimes it's not the actual figures, it's what's said behind the figures that we need to take notice of. Certainly potentially going to be volatile, so don't forget your risk management techniques. So, stock market's down, dollar up. What about commodities? Well, gold and crude oil are eyeing additional gains. Gold started an increase from the $2,025 per ounce zone, and crude oil rallied above the $74.90, that's $74.90 per barrel, and the $76 per barrel resistance levels. To start with gold, let's take a look at the hourly chart from FXOpen, and price found some support near $2,008 per troy ounce, formed a base and started a fresh increase above $2,025, and in fact moved above the 50-hour simple moving average at $2,032. The bears did appear, and they appeared near the $2,050 mark, which we know can provide a little bit of resistance. We saw a high, in fact, of $2,048.32. Price does seem to be consolidating a little bit since then, but has that resistance at $2,040, has that gone? And in fact, $2,050 an ounce, a breakthrough here could well lead us to $2,065 and maybe push onwards and upwards past that to the next level around $2,080. Flip side, we have got some support at $2,032. Again, as mentioned, that's the 50-hour simple moving average. After that, we could see a decrease down to $2,014 per ounce. So not a surprise to see gold having a little bit of a fill up with the way things are going with the stock markets, but it's not clear. So do keep your eyes and ears open. Oil, well, you know, what's been happening there? We take a look at the WTI oil hourly chart. It gained some bullish momentum after breaking $74.90 per barrel. In fact, it sustained an upward move above $76. Did find plenty of resistance though as it pushed towards $79 per barrel, and after it came back, tried to push on again and found further resistance at $77.85. The price has recently tested the $76 support level, and that level remains in play as well. Looking further forwards, if we take a look at some resistance, we've got $77.85, $79, and then $82 per barrel. Support, obviously we know about the $76 level, but if that's broken, we could be looking at $74.90 per barrel and then $73.50 per barrel. Now, we can't forget other aspects in play here. Geopolitical concerns, what's happening in the Gulf now. Of course, all of these can have an effect, particularly on the oil price. So TA, technical analysis and fundamental analysis all need to come into play here. Okay, well, it is earnings season and report season in the States, as we've already discussed the impact on the NASDAQ. And we've got some quite large reports coming out Thursday. And we're going to take a look at one of those stocks now, and that's Apple. And Apple stock has been strong pre the December earnings report, which, as I say, comes out Thursday evening. We're looking at pre-market price at the moment of about $185 per share. It closed last Friday, mid $195 range. Pretty impressive start to the year with a high $180 per share range just on January the 17th. Now, the report's coming out and we've got expectations of revenue at around the $32.65 billion mark, which will be the highest quarterly revenue since Q1 2022. And the EPS also looks set to be the highest in over 2 years. Main reasons for these drivers are sales of the latest iPhone are actually expected to come in at around the $68.4 billion mark, which would be its second highest quarterly earnings from hardware sales. There has been talk that the iPhone 15 not being as popular, and these sort of figures would indicate otherwise. So a little bit of clarity on that demand for the iPhone 15 should be seen later on Thursday. There are, of course, some issues in the background for Apple. Well documented, the Apple Watch sales issues. That's due to patent infringements, and in fact several states and countries looking at not allowing Apple to sell their watches currently. There's also possible, though this is purely speculation in and around the market at the moment, of a Department of Justice potentially citing Apple for anti-competition stance in its marketing of iPhone products. Now, we see sort of these types of cases going on. Look at Microsoft, Blizzard takeover. Don't think that's quite as severe, but again, something to keep your ears open for. So 2023 was definitely a good year for Apple, despite some of the sort of intra-year volatility. We had a stock price low of $141, and we know we're significantly above that now. Has eased off a bit this week, as I said, as other tech giants' sort of reports have actually led the market down, as we discussed earlier, despite results coming in above expectations. So all eyes will be turning to Thursday's report. Could it exceed expectations and still see a decrease in the share price, as we've noted earlier this week? Or it could provide some positivity in the market. I say it's not just Apple on Thursday, it's also Amazon and Meta as well. So keep your eyes open for those reports, and we wish you luck with your trading in the week ahead. Bye for now.